The following podcast is for the sole purpose of entertainment and at no time represents an attorney-client relationship or legal advice from the hostess or her guests. For legal advice, please contact an attorney in your area. Welcome to Winning at Divorce. Please join our hostess as she welcomes guests to sit down with a favorite beverage and take a look at the many circumstances, stages, and processes of divorce and provide empowering anecdotes and tips to assist you in winning back your life. Our beautiful and talented hostess, Michelle Gregory, is a practicing Indiana divorce attorney, mediator, entrepreneur, and coach. For more information about her services, go to www.hmichellegregory.com. So pull up a seat, grab your favorite drink, and enjoy the show. And now, without further ado, here is the hostess of Winning at Divorce, Michelle Gregory.
Welcome back to Winning at Divorce podcast. I'm your hostess, Michelle Gregory. I'm a divorce coach and an attorney and a mediator. And I'm so happy today to be honored to be back on the show. And thankfully, I have a really good friend that I've known forever join me, my friend John. And I'm going to say it right. Misz.
Yes.
John Misz. And I've been butchering it for years, so thank goodness.
Join the crowd.
Thank goodness I'm saying it right today. And this is episode 5. We've shot 5 already this year.
Look at you.
I know, isn't it exciting?
Yeah, it is.
So we're going to talk about winning at marital insurance today with John and talk about some different tips and anecdotes and maybe some funny stories. I'm sure he's got plenty. Maybe even some about me, who knows? But before we do all that, let's go ahead and have a toast.
Okay.
So one of the traditions here at Winning at Divorce podcast is we always have a toast. And today I have orange juice. I hope you like it.
That's good.
And I went all
No
out.
vodka in it.
I went all out. No vodka. Yeah, everyone always says, where's the alcohol? Like every guest so far is like, where's the alcohol? But it's
That's
during the day.
That's a crowd you run in, I think.
Well, possibly. But pretty much everybody I know drinks. But I went out and I got the best kind, my favorite, the simply orange, but I got the light because I'm watching my calories.
Okay.
And vitamin C because it's flu season. And I just thought it might be a good idea for us to have a nice toast. And no, there's no champagne or vodka in here, unfortunately. Okay. But so what would you like to toast to?
To your success with your podcast.
Oh, well, everybody says that. Thank you. I'd like to make a toast to you and your business and your family, and may your marriage last forever. Because we don't want you to have to call me so you know how to win a divorce.
Yeah, I just want to call you for fun stuff.
Exactly.
Or, not that kind of business.
Not that sort of stuff.
Sorry.
Well, it's hurting my wallet, but I guess I'll be all right. And they go down nice and smooth. It's not too tart, not too pulpy.
I like it.
I know, it's so good. I need to get some sponsors, Wes, that sponsor our juices. That would be our good sponsors.
A juice sponsor.
We need a juice sponsor. Yeah. So the first segment, I really want to just kind of talk about you so that way our guests.
Okay.
And since you told me before we started rolling is that you travel all over Indiana.
Yes.
And you serve clients all over Indiana.
True.
So anybody in Indiana can call you up. So you're licensed here. Are you licensed in any other states as well?
I am not. I used to be in Illinois and Ohio, and it's expensive to maintain licenses in other states.
Yeah.
So unless you really get on it in those states.
But you're willing to drive all the way up to Elkhart or wherever you need to be.
Depends on
the kind of policy that they want.
Exactly.
Okay.
But
so if it's lucrative.
Yeah.
All right. So give us a little bit of background. I know you sent me your bio, and you're from Anderson, Indiana.
Yes.
So tell us about that and kind of give us a little run through of your past, your history.
Born and raised Anderson, Indiana. It was at the time when it was really hopping. It was a General Motors town.
Oh.
They had 35,000 employees.
Wow. Did everybody drive cool cars?
Everybody got a new car every 6 months.
Oh, man, that sounds nice.
To support the business.
Yeah.
And back in the 80s, the auto industry kind of went in the tank.
Yeah.
And it went from, I don't know,
close to 90,000 people down to about 50,000.
Oh, wow. Like half the people left almost.
Yeah. So, but great experience growing up there.
Yeah. And you're an IU grad.
I'm a Ball State grad.
Oh, Ball State. That's right. Sorry.
Fighting Cardinals.
I don't know why I was thinking IU. Okay.
Because everybody's from IU down here.
So, are you allowed to be down here since you're not from IU?
As long as I'm not from Purdue, I'm okay. They don't care about anybody else. As long as you're not from Purdue.
Now, you've been married twice.
Correct.
And so you have divorce experience.
I do.
Yeah. So, any good tips for anybody who's been through divorce, like something that you wish you had known or could share to help someone else who's going through a divorce?
We had 2 children. They were about 3 and 4 years old.
Well, they were little. Yeah.
They were little at the time. And we both put aside our differences and made it all about them.
Oh, very wise.
And
that's how you win a divorce.
We did.
When you make it about your children, not about yourself.
And we're still friends to this day.
That's a miracle.
And, we got a grandkid, family. And so, yeah, I mean, it turned out better than most.
Yeah. So the tip is...
and I know you probably won't like this, and it's probably way wrong, but we didn't even get an attorney.
What?
We shared an attorney and just...
Wait a minute. Is that ethical? Sharing an attorney? I'm not sure that's ethical.
We just kind of sat down and drew it up. Here's what we want to do. And an attorney just filled in the blanks, and we took it to the judge.
So as long as that attorney was representing only one of you.
Right.
And the other person was reviewing and making decisions.
Correct.
Okay.
Correct.
Okay. Then that's
I won't
allowed.
say we shared, but yeah, we kind of did it yourself.
Right.
And it worked out great. We.
So the tip would be work together.
Yes.
Come to an agreement fast and easy.
Yeah. Realize, what's over's over.
Right.
Make
the kids the most important.
Make the kids most important, and just come to an agreement that stuff is just stuff.
It really is.
And
you're going to have to replace it anyway eventually. I mean, it just wears out.
And, to this day, we don't or didn't want to, every time she and I are in the same room with our kids that we had together, that they didn't, feel like they were going to puke because something's going to happen.
Oh, bless them. Yeah, make them anxious and scared.
Right.
Yeah, it's good when parents can get along because it makes the children feel safe.
Yeah, they're almost happy. The other way, like, you guys are weird.
Like, you're a little too friendly, huh?
Well, I wouldn't say too friendly. It's just, we just get along, and they're like, you guys are weird because our friends that have gotten divorced, their parents have gotten divorced, that they don't get along. So what's wrong with you guys?
So you jumped in the water again. You took another plunge.
It took me it took me a few years.
Yeah. But you guys have been together for a long time.
Yeah, 20 plus.
20 years is amazing. Especially for a second marriage.
It's a record for me.
It would be a record for me. So, it'd be a record if I add both mine up.
There you go. That counts, right? You can add them all up.
We add them together. How long have you been married? Oh, let me see. Let me add them all together. So tell us how you got into the insurance business.
Went to Ball State, majored in marketing and management, started doing interviewed with an insurance company, and got hired by them. And I moved to Minnesota and worked in their home office.
That's cold up there.
For a couple of years, yeah. My birthday's in May, and it snowed May 5th.
Oh, my gosh.
Cinco de Mayo, that's what I call it.
That's good.
Kind of stupid, but yeah. And we moved. I graduated, got married, moved to Minnesota, lived there a couple of years, and it snowed over a foot.
Oh, my gosh.
On my birthday.
So not my place.
And I said, let's head south. Let's go back south. So we moved back to Indiana. I took a outside sales position with the same company, and we moved back to Indiana to be closer to family, but far enough away where, mother-in-law couldn't knock on the door unannounced, that kind of thing.
Those mother-in-laws.
Yeah. So So that's how I got in the insurance business, and it kind of gets in your blood when you're in it, and I've been in it ever since.
Well, you have a really good personality for it because you love to talk to people. And you're jolly and you're fun to be around.
Thank you.
You know, and I was trying to recount how you and I met, and Fred, a local attorney here who's a friend and colleague and actually even represented me in my divorce legal issues, is the one who told me to call you.
Did you know Fred's getting married?
Is he finally?
Yes.
Fred. Oh,
I know. He told me the other day. I'd heard rumors.
He's being brave. Good for him.
I know. I'm proud of him.
I am too, because he told me years ago, I'll never, ever do that again.
What guy hadn't said that? You probably said it too.
Of course I have. I am never getting married again.
Be honest.
Of course. Well, you know, when you see what I see all day long, plus what I've been through, it's like, no.
I've heard your statistics, like first and second marriage.
Oh, it's bad. First, second, and third marriages. I mean, it's like as you go up to each marriage, the percentage of possible failures increases exponentially. It's crazy. Yeah, it's crazy.
Good for business, I guess.
I guess so. I can also marry people. I'm an ordained minister, so I can marry them and divorce them. Isn't that crazy?
I learned something about you. I never knew.
Yes. Yeah, it's kind of nuts.
So you can divorce them and then hitch them back.
Yep. So what areas of insurance do you license to sell?
I do property and casualty, both commercial for businesses, and I do home and auto and all the toys that go along with it, boats, motorcycles, all that fun stuff.
Ski jets, jet skis.
Yes.
Yeah, all the fun stuff.
All the fun toys. And I also do small employer benefits.
Oh, cool.
I don't get into like big groups, but small businesses, you know, their group health plans and stuff like that. I do life insurance, disability, all that craziness.
All the good stuff.
And individual health too.
All right. So I think in the next couple of segments, we'll talk about the different areas of insurance that you sell and why it's important to have good insurance during a divorce.
Right.
Or after your divorce and all the things that you need to do, make sure you have covered.
Yes.
And why.
Yes.
So we'll be back with my good friend, John. So tell him again your name and how to reach you.
John Misz. My number is, and I work off my cell phone, 812-327-9533. Call me anytime or text me.
Do you have a website?
And my agency is Choice Insurance Agency, and you can reach me there at john@thechoiceins.com.
Very good. So we'll be back, and we'll talk about why insurance is important. We're going to focus on particularly why life insurance is really important for people who are about to divorce or divorcing.
Start.
Yeah, or have just gotten the divorce. So life insurance to me is probably the most important type of insurance you need if you're going through a divorce. And we'll be right back. And thank you, John, for sharing our stories.
Thank you.
And thank you for you guys hanging in here and listening. And don't go away, because we're going to be right back with great, interesting tips on why life insurance is important for you. Right after this message from our sponsor.
Thank you for listening to Winning at Divorce with your hostess, Michelle Gregory. This is not a breakup, it's just a quick break. We'll be right back after these messages from our generous sponsors.
Divorce is the most emotional and stressful time in anyone's life, and it is a global phenomenon that stretches across most cultures and backgrounds. Hi, I'm your Winning at Divorce coach, Michelle Gregory, as well as a divorce attorney, mediator, and entrepreneur. My coaching clients come to me to bridge the gap between their attorney and their therapist. As a divorce coach, I can assist you with planning, preparing, and winning at divorce. As Zig Ziglar once said, you were born to win, but to be a winner, you must plan to win, prepare to win, and expect to win. For more detailed information, visit hmichellegregory.com or call me at 812-339-3600 to get started on your journey towards winning at divorce.
Welcome back to Winning at Divorce, and thank you for staying tuned in with us. Don't forget to check out our website at www.hmichellegregory.com. And once again, here's our fabulous hostess, Michelle Gregory.
And we're back to Winning at Divorce podcast, and I'm your hostess again, Michelle Gregory, and I'm here with my good friend and my personal insurance agent, John Misz, and he's going to give us some really great information about life insurance. So, John, tell us about, I know there's several different types of
Correct.
insurance, and everybody needs something different. So let's start with the most popular one probably, which would be maybe whole life? Or is it term life?
I'm a big term writer.
Okay, so tell us about term life.
Have you ever heard of Dave Ramsey?
Absolutely, I love him.
Okay, I'm Dave Ramsey's endorsed local provider for about 15 counties.
Wow, that says a lot too,
in South
because
Central, yeah.
he doesn't accept just anybody. You have to go through a rigorous program in order to get accepted by him.
Yeah, they check you out pretty good. They follow up on the referrals they send you, with questionnaires like how'd John do and stuff like that. There's also a group of agents that I'm part of that are also Dave Ramsey insurance people from all over the country.
So you guys get together and
we do a monthly web meeting.
Oh, cool.
And we talk about the Dave Ramsey program and different ways to do business better.
And if anyone is considering a divorce or going through a divorce or just getting out of a divorce, getting on board with the Dave Ramsey program itself is a very good idea because it teaches people how to become millionaires, to become debt-free, and how to save your money and invest your money wisely and become a millionaire. Everyday millionaires, I think is what he calls them, right? So
I'm sure you've seen divorces create a lot of debt.
It creates a lot of debt, and it depends on what the divorce decree says and how, it gets divided. But the more debt someone has, probably the more life insurance they need.
True.
Right? So go ahead and tell us about term.
Well, Dave Ramsey, his deal is if you buy anything other than term, he'll, kick your butt.
Okay.
He's not big on the other types of insurance, but I jotted some notes down here.
Sure, you can read them off, whatever you want to do.
But basically, one of the reasons that you need life insurance in the middle of a divorce, especially if there are kids,
yes,
for child support.
Of course.
So, for example, if you're supposed to pay $1,000 a month child support, whatever, and you die, no more child support.
Unless there's something in the estate.
Right. To go after.
Yeah.
And with life insurance, it's an easy, quick check.
Right.
To do it.
And so if someone's going through a divorce and they decide, okay, I need life insurance, and a lot of times some judges will order people to get life insurance.
I've had that happen, yes.
And sometimes good negotiating attorneys can make sure life insurance is included in a decree, which I always try to recommend, depending on people's budgets, because it is an added expense.
True.
But how do they know how much life insurance to get? Regardless if it's ordered or agreed to, how much should they get? So they have some kids. How do they know how much they need to get in order to cover?
The two things I look at, child support for a certain period of time. So if you've got child support for 20 years, you want to buy at least 20 years worth of term life insurance.
20 times what you're paying annually.
A good round figure is maybe 10 times income.
10 times income.
But, you can whittle it down to how much, if I got to pay $1,000 a month child support, that's $12,000 a year, and I'm going to have to pay for 20 years. You buy that amount. And I've had cases where people, they'll buy $300,000 worth of term insurance for 20 years, and as their amount decreases over time, they can reduce the amount of the life insurance.
But a lot of times people forget to factor in things like college.
That was another thing on my mind.
Or a car.
Correct.
Or,
expenses.
Any kind of expenses that a child might have, extracurricular activities and things, medical, band. Those things get expensive.
Sure.
And every child is different.
Mm-hmm.
So you take that annual amount that you would be, but you'd also add on enough for college and maybe some incidentals along the way.
You throw in a little bit of extra just in case.
Because you don't want to leave your children poverty struck because you've passed and them not being able to live the life that they should have or could have lived.
It's important to do this before the divorce is final.
Very wise.
Because if the party that's required to get it after the divorce is final decides, I'm not going to get a physical, or they've got some health concerns where they can't qualify.
Yes. It's good to know that before you get to the settlement or to trial.
You bet. So all that should be done and applied for and approved and all that beforehand.
And it helps them also factor that into their budget.
You bet.
And it also helps you design a decree that specifies how much they can have or should have and how that payment's going to be made and who's going to be ownership. Because like you said, if they get it, but then they cancel it.
Right.
Or they don't get approved.
Correct.
You know, sometimes the other spouse has to buy a policy. So like I would have to buy a policy against my ex.
Correct.
In order to make sure, and then maybe have him pay more child support or make an extra payment towards me to make sure it's covered.
That's one of my suggestions.
Yes.
Because how do you know if you're just the beneficiary or the kids, or how do you know that the payments got made and the policy's still in force?
Right. And you don't want to be dragging them back to court for contempt every time you think that they don't have it, because that's attorney fees, time, and stress.
Exactly.
So it's always good to add that in.
Good idea.
Well, see, that's what us lawyers are supposed to do.
You're good at this.
I'm no stranger.
I do recommend that the spouse buys it on the other spouse.
Yeah.
So they are the owner and the beneficiary.
And it's good if you can both do that to each other.
Correct.
Or at least if you're going to buy your own policy, that there is some sort of mechanism built into the decree about how you're going to provide proof on a regular basis.
Correct.
Yeah.
Ooh, good.
Yeah.
Good stuff.
Like an invoice or, payment, proof of payment each month, somehow knowing that it's being taken care of.
Sure.
Yeah.
Sure.
And now, does people have, so if someone wants term, do they have to get a 20-year or a 30-year, or is there other options?
You can actually buy term all the way up to age 120.
Oh, so you could do like 5, 10, 15, 20, all the way up to 100?
Yep. And typically in a divorce arrangement, eventually, and Indiana's not an alimony state.
Yeah.
Well,
we have maintenance, which is similar.
Okay.
But it's for a designated time.
Right.
Right.
So you kind of, there's a time cutoff. So for this specific need, usually the person that's required to get it gets it for a specific time until that need is.
And so if you have alimony or you have maintenance, depending on which state you're in, it's also good to have insurance, life insurance that covers that expense too, because a lot of times that expense exceeds their death.
Yes.
Depending how, again, that decree is worded.
Exactly. Exactly. So I don't deal with that much.
Yeah.
Part of it. But yeah, in other states, it's
easy to get term. Some medical questions, an exam.
Yeah. Nurse comes out, depending on the amount. The more face amount coverage that you purchase, the more hoops you have to jump through medically.
Right.
If I'm trying to think of what else. I mean, avocation's an issue. Like if you're a diver or a pilot.
Oh, okay. So you have some extreme sports or something that you're involved in that makes it
rock
more likely
climbing,
for you to hurt yourself.
You bet. That could increase.
Yeah.
Your health could.
So they ask you a lot of questions and then kind of determine what the premium should be based on that.
You bet.
Okay.
So you kind of picking them out, pick a time period that you need it for.
Okay.
And then
they kind of take all the facts in consideration and make a determination what your premium is.
I've got like 40 different companies that I work with.
And it's fairly reasonable price. Yeah. Mine is super cheap.
Yeah.
Yeah, I love it.
You have term?
I do.
There you go.
Dave Ramsey would be mad at me if I didn't.
He would.
So for those who defy Dave Ramsey, tell us a little bit about whole life.
It is a policy that does not have an end to it.
Okay.
It's something that you keep. We call it permanent.
As long as you make that payment, you can keep it.
As long as you make the payment, you can keep it, till whenever. Sometimes there's settlement options where you can say, I don't want to make, sometimes you can pay it ahead, pay it for 20 years and then it's paid up, or pay it to age 65 and then it's paid up forever.
That's nice.
It costs a little bit more.
Now, whole life is more like an investment, right? It's kind of like a savings plan too.
It is.
Yeah.
It's not a great investment, in my opinion.
Probably the reason Dave Ramsey doesn't like
Correct. He would rather you buy term insurance while you need it and then
save your money.
And then save your money and invest it with, a broker.
Yeah.
Or put it in your 401k.
So it's earning money on your behalf.
Earns a little bit more money.
Yeah.
Yeah, because life insurance has fees and things like that built into it. But for some people that won't, it's a forced savings plan.
Yeah.
Like, well, should I put money in my 401k or go on a trip?
Oh, yeah.
Or buy a boat?
Yes.
Or,
Yeah.
And
so it's a monthly payment. So it's creating a habit that they're saving, basically.
Correct.
But the nice thing too about it is, since it's your money, the cash value, there's a cash value, and that's your money.
Mm-hmm.
You can always borrow against it if you have problems, right?
You can. Mm-hmm. They charge you interest, but it's a low interest, but you can borrow against it.
Do you have to pay it back, or is it just come off the other end when you die?
You have to pay interest on it till you pay it back.
Okay.
Or it comes off the death benefit.
Okay.
At the end. So it decreases the amount of the coverage.
And since it has a cash value, guess what? It gets divided in the divorce. It's a piece of property.
Boo.
Yeah, it's like a car or anything else. It has value. So it does go on the marital balance sheet.
Interesting.
Yeah. Where term life does not, because you don't own it per se, like a dollar amount. Well, that's very, very interesting. Good, helpful tips. And then I guess there's some other types of life insurance as well, if I remember, like universal life. What is that exactly?
It's very similar to whole life.
Okay.
It's a permanent type insurance.
Okay.
But it's got an investment component inside of it rather than a whole life has a schedule. Like if, in 10 years you got this much cash value, in 20 years you got this much cash value per schedule. Mm-hmm. Universal life is based on a fluctuating interest rate.
Okay.
So it could grow a little faster.
Okay.
Or I've seen cases where if you project the interest rate too high, when it first came out back in the 80s, the interest rate paid on those type of policies was very high. Mm-hmm. And people projected their payment based on a high interest rate. Mm-hmm. So, which was, let's say, 12%.
Okay.
And when it fell down to 3 or 4%.
Oh, wow.
Those people are getting letters saying you ran out of money.
Oh.
You need to put more in.
Oh, wow.
To keep it.
Okay. So it's not the best option.
It's very flexible.
Yeah.
And as long as you've got money accumulating in it, you can skip a month and have it come out of the cash value, or you can put a little bit extra in it.
Okay. So it just depends on your particular financial situation at the time.
Correct.
Right. And then there's variable life as well.
It's tied to the stock market.
Oh, okay. So there's a big possibility of loss.
There's a possibility of loss. Most of the policies have guaranteed minimum rates of return built into them.
Okay, so it's not as risky as I thought it would be.
But it's still a little bit risky, but you have more. It's like the stock market. You have greater chance of accumulating.
Right.
But you've also got a greater chance.
So it's for the long haul.
Of risk.
So it's something you want to keep like stock for a long period of time.
And you also have to deal with an insurance agent or a stockbroker that is licensed in stocks to sell stocks and things like that.
Oh, so they have to know both ends.
You bet.
Okay. Wow.
You bet.
Oh, okay. So then what is group life insurance?
Group life insurance, if you're on your employer's plan, typically there's an amount of life insurance built in that the person the employee gets. Sometimes it's a flat amount.
Okay.
You get $20,000. Sometimes it's a percentage of income.
So the employer, the company itself has a group plan, and that's like a benefit to the employer. That the employer pays it, so it's a benefit to the employee.
Correct.
Okay, so it's usually like a small, something
It's
small.
usually a small amount. Sometimes on larger employers, it might be.
So if you're talking CEOs and
it might be 2 times of your annual salary or your annual base pay.
So it's just something to cushion the family, help them be buried if something was to happen, most likely.
I always tell people it's a nice perk, but when you're buying life insurance or calculating that into your need, don't really count on it.
Yeah.
Because if you change jobs, it's gone.
So you need to have your own policy, and this is just a little extra something.
Correct.
Right. Okay. And then one of the things I discovered is riders. I wasn't sure what those are. Is that like an add-on to your insurance?
They're
policy?
add-ons. You can get riders on your policy to pay the premium if you're disabled.
Oh, okay.
You can get riders to add amounts for a spouse or kids, almost like burial type insurance.
Okay.
And even now you can get riders on a policy for long-term care.
Oh, wow.
So
so you just pay a little extra premium for this extra piece or component that you add on?
You pay a little extra premium for an extra piece. And like on the long-term care riders, you can take a percentage of the death benefit and use it towards nursing home care or in-home care.
Well, that's kind of cool.
It depletes the amount of your death benefit.
Right.
So if you've got $100,000.
But if you're gone, you don't need it, but you need it now.
Correct.
Okay.
A lot of insurance policies have accelerated death benefit riders. So if you get I've had clients use this, what that does for you, and a lot of times it's built in, so you don't even have to pay extra for it. But if you are diagnosed with a terminal illness, you can use part of the death benefit now while you're alive. I want to take my kids to Disney World for
do something
for 2 weeks,
memorable.
Or take the family on a cruise, or I've had people take their families to Europe. Things like that.
Because they know their time is short.
They know their time's short. And they want to create a couple memories before they pass. And
now, is the rider attached to term or whole, or what can you attach a rider to?
Depending on the rider, you can attach it to
any kind of insurance.
Just about any kind of insurance. The long-term care rider has to be a universal life or whole life.
Okay.
But most of the others, you can attach them to term.
Okay. Oh, you can. I didn't know that. I may have to call my agent. All right. So very importantly, let's talk about beneficiaries, because, every state has a different idea when you can change your beneficiary. So a lot of times leading up to divorce, people will think, oh, I'm fixing to file for divorce. I'm going to change my beneficiary. Some people want to do it in the middle of divorce, and then absolutely people need to do it after the divorce. So what is your recommendation for how to handle your beneficiary through the process? If
you're going to do it, to my knowledge, you've got to do it before the divorce action's filed.
That's the best.
Or after it's finalized.
Right. It's harder to do it during the divorce without some sort of consent.
I've heard terms with like automatic temporary restraining orders. Is that something that you can't touch anything financially until? Right now, here in this county, I know for sure it's not automatic. Okay. There's not an automatic order that comes down that says you cannot change anything, but you can request one. Okay. And a lot of people do. If you had a good lawyer, advise you. And sometimes your good lawyers will ask that if anything has been changed in the last 6 months without the other person's knowledge and consent, they have to change it back. In some states, whether it's a divorce or not, you have to have spousal consent to change a beneficiary. Which I think is really good. I do too. Because Indiana doesn't have that yet. You shouldn't be sneaking around. That's not winning at anything. If you're being sneaky, you might think you're winning, but it can come back and bite you in the long run. Right. The right thing to do is always keep your spouse informed. And if you keep your spouse informed, you may not have an ex-spouse. There you go.
Because if you're, have high integrity and doing the right things, then maybe they won't want to move on to someone else.
And you always get the phone call, and I'll bring this up in just about every kind of insurance that we're going to talk about. You get the phone call, hey, my wife ran off with somebody or my husband ran off with somebody, changed my beneficiary.
Yes.
Let's hold off because as the divorce proceeds, if you do end up finally getting a divorce, you may have to change it back.
Yeah, there you go.
Anyway.
And it's essential after the divorce to change your beneficiaries and make sure the right people. So what are you recommending for that?
A lot of people are leery about their ex being the beneficiary.
Yes.
For obvious reasons.
Right.
Don't take a drink if they offer it to you.
Yeah.
That kind of thing.
Yeah.
So a lot of times, maybe if it's for the kids, maybe setting up a living trust.
Right. And I had Stephen Douglas. I don't know if you know Stephen Douglas.
I saw your podcast.
You saw the
with him.
I'm so glad you saw it. So Stephen Douglas was on, and he was talking about,
I'm a big fan. I watch all your podcasts.
Oh, thank you. I'm so fortunate. I'm flattered. About the importance of making sure your beneficiaries are changed, especially on your policies, because it's a pay at death.
Correct.
And once you're dead, you can't change it. And whoever's name gets it, regardless of anybody's complaint. And most insurance companies, if I'm not mistaken, don't want to give money to minors.
You can, but it's not wise.
Right. And then, so you don't always want your former spouse, depending on that relationship, to have it, because you can't trust whether or not it's going to go towards the children. So
I had a case, a friend of mine's sister and his husband. I wasn't the agent or anything. I was still a kid, but I remember his sister and brother-in-law got divorced, and he died in a canoeing accident.
Oh, wow.
And he left all the money, I think, to his son. Mm-hmm. The mother was the guardian of the son, so she had access to the funds without. And she was like, I think our son needs a new Corvette to drive around in. And I mean, by the time the kid got to college age,
he had no money left.
No money left.
Yeah.
The stepdad, started a business and it failed. And, it was just a horror story.
Yeah. And that's exactly why you want to make sure the beneficiary is. A lot of people will have an estate and they make the beneficiary the estate with instructions through their will on how to handle that estate and that trust that's in the estate, which is very, very important.
Yes.
Yeah. To make sure the kids get what they're supposed to be getting.
Yep. And it's usually got an executor over that trust.
Exactly.
And they determine how the money gets doled out.
Someone that's not related usually is the best, because then they're making decisions based on the child's need at the time, not the parent's desires.
Who would you suggest? Like an attorney, or
sometimes there are attorneys that do that, or a close friend.
Okay.
But I always suggest that you have more than one. So usually you have someone like your attorney and a friend, and they have to work together.
Smart.
Someone you can trust. Yeah. Because you don't want them, like you said, the money disappears by the time the child needs it.
Right.
Yeah. Not good. But, you're not divorced until you're divorced. And people don't realize that when you're going through the divorce process, if you die during the divorce process, the divorce goes away and your former spouse is now a widow or a widower, and they have a right to inherit some of your property. So you want to be careful.
Yes, you do. And it's, and like we've talked before, you don't really want to make a bunch of changes until it's final. Until
you know for sure what's going on.
I had a client call me up, I'm getting a divorce. What do we do about the car insurance? And, we'll talk about that later. But so I said, sit tight, let me know what's going on. And I ran into her recently And I said, hey, how's it going? What's going on with your divorce? I haven't heard from you. And she goes, oh, we're buying a house. I was getting ready to call you.
Buying a house.
So I guess they reconciled.
Oh, okay. There you go. You never know.
So I'm like, oh, I'm glad you didn't make a ton of hasty changes.
Exactly.
To everything.
Exactly.
You guys got it worked out.
And they worked it out and they won in a different way.
In a different way.
But that's great.
Yeah.
It's always good to hang on to a marriage if there's a possible. Well, these are great stories, John. Thank you so much. And I hope my listeners are enjoying them as much as I am.
Me too.
And so we'll go over some things like health insurance and disability insurance and things like that in our next segment.
Those are huge.
Yeah. So there's a lot of information. So we're going to take a short break so you can hear from our sponsor. I'm Michelle Gregory, your hostess at Winning at Divorce, and this is my lovely guest and friend, John. So John, once again, tell them your name and how to find you.
John Misz, Choice Insurance. John at Choice. At thechoiceins.com, and my number is 812-327-9533. Email me, text me, call me.
And that's how you do it. You just give them a call when you're ready for some insurance, or give me a call if you're not sure what you want to do and you need a divorce coach. Again, Michelle Gregory here at Winning at Divorce, divorce coach, mediator, and attorney. And we'll be right back, so stay tuned right after this short break and message from our sponsor.
Thank you for listening to Winning at Divorce with your hostess, Michelle Gregory. This is not a breakup, it's just a quick break. We'll be right back after these messages from our generous sponsors.
Divorce is the most emotional and stressful time in anyone's life, and it is a global phenomenon that stretches across most cultures and backgrounds. Hi, I'm your Winning at Divorce coach, Michelle Gregory, as well as a divorce attorney, mediator, and entrepreneur. My coaching clients come to me to bridge the gap between their attorney and their therapist. As a divorce coach, I can assist you with planning, preparing, and winning at divorce. As Zig Ziglar once said, you were born to win, but to be a winner, you must plan to win, prepare to win, and expect to win. For more detailed information, visit hmichellegregory.com or call me at 812-339-3600 to get started on your journey towards winning at divorce.
Welcome back to Winning at Divorce, and thank you for staying tuned in with us. Don't forget to check out our website at www.hmichellegregory.com. And once again, here's our fabulous hostess, Michelle Gregory.
And welcome back. Thank you for sticking around and listening. Today, we're having a great guest. John Misz is here with us, my friend and insurance agent. And he's telling us all kinds of good stories and some great tips on what to do with our insurance when we're going through a divorce or already been through one. We just finished talking about life insurance, and there was a lot of wonderful information. But there's other kinds of insurance, too, that are affected by a divorce.
True.
So, there's health insurance, auto insurance, homeowner insurance. There's so many things that we don't think about until we're in the midst of getting a divorce.
Right.
So tell us about health insurance, because that's a big one for people.
It's huge.
Yeah, it really is. Because a lot of people, they count on their spouse whose employer provides their insurance. So what do they do when they lose their insurance?
Well, typically the employed spouse is required to keep all parties on the insurance until the divorce is final.
Okay.
And then the divorced spouse that was a dependent on the plan is required to get off the plan.
And actually, some of them kick you off after so many days after the divorce is final, right? I don't think you like 30 days to whatever.
Depending on some of them, it's the day it's final.
Oh, okay.
Some of them, it's you're covered till the end of that month.
Okay. So if you're going through a divorce, it's a real good idea to find out how much time you have to get insurance.
You want to spend some time with the HR person at your spouse's
But sometimes they won't talk to you because you're not an employee.
True.
All right. So then they have to go through their attorneys. So let's say they're getting kicked off, whatever or whenever. What do they need to do to guarantee that they have some insurance?
If it's a small employer under 20 employees, and it's not 20 insured employees or 20 full-time, it's 20 employees.
Period.
If it's under that, the employer is not required to carrier insurance under the COBRA Act. I'm sure everybody's heard COBRA.
Okay.
If it's a larger employer, 20 employees or more, they're required to offer you COBRA.
Okay, but the COBRA is from their employer, but you pay the premium.
Correct.
At a much higher rate.
Well, it's the same rate, but there's no employer contribution.
Oh, I see. Okay.
So typically, industry or nationally, typically employers pay on the average, and I think this is a high number, but I've read this, 83% of the premium for an individual and 69% of the premium for a family.
Okay.
So when you're looking at your pay stub and it says, my insurance is $40 a month, it's really $500 a month.
Right.
And the employer's paying $460 of it.
Wow. Okay.
So that's really nice of your employer.
Yeah.
Thank them graciously every time you can.
Stop complaining about your job.
But when you are the spouse that's leaving as a dependent,
you're dependent,
and you get offered COBRA, it seems extreme because the employer is not required to contribute to
suddenly
that.
You're getting the whole premium invoiced to you.
The whole premium plus 2% administration fee.
Oh.
On top of that.
2%.
Yeah.
Wow.
For having to just deal
with it. Okay. Because you're not an employee, so they're charging you. And how long can they stay on COBRA?
A dependent can stay on COBRA up to 36 months.
36. Okay.
Sometimes it's a good option, but a lot of times it's very price prohibitive.
Right. So when it's price prohibitive, what's other options for people?
Well, another option is you can go to the, it's called the marketplace, which another term is Obamacare.
Obamacare is what everybody's familiar with.
That's what everybody's familiar with. And after you've been booted off the plan, you've got 60 days to either take COBRA. If you don't say, yeah, I want it and pay the premium, you're done with COBRA.
Yeah,
there's no chance to go back.
Okay.
And you also have to pay your premium in a timely manner.
Okay.
So
or you've waived your right to it.
Correct.
Okay.
So if you are late on a premium, they can kick you off.
Any premium along the
month. If you pay them monthly, there's a 30-day grace period, so they can kick you off.
Wow.
And then 20 days later, hey, I've got the money, and they put you back on.
Oh, okay. Okay.
But you're technically not covered.
Okay. Well, that's not very good. Yeah.
And you've also got 60 days. It's a special enrollment period under the Affordable Care Act for Obamacare to pick a plan.
Right, because it's what they call a life event or a qualifying event.
Yeah. Yes. And divorce and losing coverage is definitely a qualifying event.
Right. So you don't have to wait till the end of the year when they're doing it. You can do it any time during the year that you're divorced, whenever your divorce happens.
You got 60 days once the divorce happens to decide what you're going to do.
Okay.
And you can go to an agent or a broker that handles that, or there's actually a website and a toll-free number.
Right. I'm finding there's less and less agents that handle the Obamacare.
Correct.
Right.
It's almost, from an agent standpoint, a pro bono kind of thing.
I see. So if you have a client who has several other policies with you, then maybe an agent would step in and help you. Otherwise, it's best probably go online. What about just coming to an insurance agent and saying, you know what, I want some health insurance? They can buy their own policy that way?
They can. There's some different product offerings. If you choose not to do the Affordable Care Act, and I guess one of the things that's good about it, pre-existing conditions are covered on an Obamacare plan.
Right.
And your premium's income based.
Okay.
So depending on, and a lot of times in a divorce situation, your income's cut down quite a bit, or at least cut in half because there's one person working instead of two.
Right. You've lost your spouse's income.
So that's factored in through tax credits. So and it's a scientific wild guess sometimes. You know, I think I'm going to make $30,000, and for a single $30,000 income person, the premium is blah.
Right.
And then at the end of the year, when you get your taxes done, for the prior year. You find out what you actually made, so you could actually owe some of that.
Could owe some.
You could owe some of that back,
Yeah.
or they could have said, "Hey, we didn't give you enough,"
Right.
and give you more.
Okay. So you
At
just
that time.
never know.
You just never know unless it's cut and dry. I make X amount a week, and that's what I'm going to make.
But it's probably, depending on your income, cheaper than just coming to you saying, hey, I want a policy, some kind. Get me, an Anthem policy or whatever.
Most of those aren't available anymore.
Oh, they're not available anymore.
Yeah, most of those aren't available.
Wow. So you can't just call up an agent and say, I want insurance anymore? You got to go through Cobra or the marketplace?
Well, there are other types of insurance. One type is short-term
Short-term.
medical
Okay.
or temporary medical. And you can get that up to 3 years now.
Oh, okay. Well, why would you want a short-term? I mean, what's the purpose of that?
Cost.
Okay.
Now those plans are medically underwritten, and they don't pay pre-existing conditions for the first 12 months.
Oh,
But if you're divorced, young, healthy, got nothing medically going on,
okay.
and make a decent income, it can be as much as 40% cheaper than Obamacare,
Oh, wow.
unless you're getting a pretty big tax break on it.
Okay. So you
because of your
kind of
income.
need to go see an agent and figure out
Yeah.
which is best
Yeah,
for you.
you can do Obamacare, and it's going to be this much, and here's what the plan covers.
Yeah.
Or you can do a short-term plan.
Okay.
There are other plans that are limited benefit plans,
Uh-huh.
which they say, we'll pay you $100 if you go to an office call. We'll pay $5,000 a day if you're in a hospital.
Okay.
So it basically determines, what your benefits are for each service ahead of time,
Oh, okay.
not whatever the doctor charges. And those are cheaper,
Okay.
and they don't cover pre-existing conditions for the first year, and they're underwritten. But
Oh, wow.
it's another option
Something.
for a person if they don't want to, if they have to pay the full boat
Mm-hmm.
for an Obamacare plan. This makes it more affordable if they're healthy.
Right. Okay.
And if you're on the plan for 3 years and you get a chronic illness, you can always jump back on Obamacare
Okay.
later.
Because they'll accept you with a pre-existing condition.
Absolutely.
And
So
so, is Medicare or Medicaid something that an insurance agent handles, or is that strictly through a government program?
Which one, Medicare or Medicaid?
I don't know.
Medicare is 65 and above,
Okay.
or if you're under 65 and disabled.
Okay.
That's Medicare.
Medicare.
If you're disabled and you're receiving SSI
Okay.
disability payments
Uh-huh.
for 2 years, you can enroll in Medicare under 65.
Oh, okay.
But you have to be disabled and
Okay.
receiving those benefits from the government for 2 years to get on Medicare. Or if you turn 65, you can get on Medicare,
Okay. And so
As
that's
well.
through the government.
and that's through the government.
So what is Medicaid?
Medicaid is a state-run
Okay.
insurance, and it's
And
for
do
low.
you need an agent for that?
You do not.
You do not. Okay.
It's through the state, and there are 2 levels of Medicaid. There's straight up Medicaid, where if you're extremely low income, you can get it and it's paid for.
Okay.
And then there's a plan in Indiana, and every state's different, but they're called the Healthy Indiana Plan,
Oh, okay.
which is actually a form of Medicaid,
Okay.
but it's a different policy, and you may have to contribute some towards
Okay.
that based on your income.
Okay. Well, so there's a lot of different options for someone based on their age, their health conditions, if they have a disability or not.
So based on your income, it's like Medicaid, then Healthy Indiana Plan or HIP,
Right.
then Obamacare.
Okay.
Then once you hit a maximum income and have to pay the full boat on Obamacare, you might look at some other options.
So basically,
as well.
you're going to need to see an expert like you,
Yes.
and who can help guide you through the twists and turns of all the different types of insurance, health insurance, to make sure you're getting the right thing for
It's
you.
confusing, changes constantly.
Oh, no,
Yeah,
that's not good.
I know. But yes.
Okay, so what about disability insurance?
Disability insurance. I don't have a whole lot of
It's
stuff
not that
written down.
popular. You don't hear about it much.
Well, it's probably the most undersold type of insurance that there is.
Okay.
In a divorce situation, we can kind of jump back to the life insurance and
Right.
child support.
Right.
Okay, what if your spouse is making good money, paying
Right.
good child support,
Mm-hmm.
gets disabled,
Excellent. Yes. Very important. And as
and doesn't
lawyers,
die?
we don't usually we suggest the life insurance, but we don't suggest the disability insurance.
Very important.
Yeah, but it's pretty pricey, right?
It depends on your occupation,
Okay.
your health,
Okay.
how long you want to wait before you get it. Like, is there a 90 days
From the injury
from the
until you
injury
start receiving
till you
payment.
start receiving it,
Mm.
and how long you want to get it,
Ah.
and how much you want to get. So there's a lot of factors that go into pricing
Okay.
and the cost of it.
So another thing we need to see an agent and kind of what are the facts in your particular situation and to make a determination
Sure.
if that's something you can afford or want to get.
And it's harder to get than life insurance
Oh, okay. Yeah.
because of they underwrite health.
Right.
They underwrite your health. They underwrite your income.
Wow.
If you make $2,000 a month, you can't buy a $5,000 a month
Ah.
policy.
I see. Because you might accidentally have an accident.
You might actually exactly. It's a moral hazard. That's what they call that. But it's very important. Another thing in divorce, if you were a two income family, now you're a one income family.
Right.
So if you're a two income family and one person gets disabled, you might be able to make it on that one person's forever or for a time period. But if you're one person family and you're disabled, you got no money coming in,
Right.
you could be in trouble.
So it's good to consider it if you have the finances because it helps give
True.
you that added cushion of security to
Absolutely.
protect your family.
Some employers offer that as well if you've got a group plan.
Oh, really?
Yeah.
So if your employer offers it, go for it, right?
And it's a good buy, and it's not underwritten. You
Right.
you basically
A couple bucks a month probably
Well,
since your employer's paying it or
correct.
Yeah.
It's a lot more inexpensive because it's on a group basis,
Okay.
and they offer short-term
Right.
coverage, which covers you up to 6 months, and then
Okay.
they also have a long-term insurance
Policy as well.
that you can buy as well.
Excellent.
I highly recommend that if it's available to you through
Yeah.
your employer,
Especially
because
through an employer.
it's cheaper. They don't ask you any questions.
Yes.
You put your name on it, and
You're
you got
done.
it. Yeah.
Awesome. So another thing I hear a lot in divorce is the car insurance. She left me and I'm not paying their car insurance anymore.
I've had that call 100, 200, 300 times.
I'm sure you have, like a day.
Get that SOB off of my policy today.
Exactly.
Um,
Exactly. And sometimes they do it. They drop it. And I don't know how that works because I have fought so many times of having to go back and say, Judge, we need this, put back on. We need my client put back on the insurance, the car insurance.
I, as a responsible professional insurance agent, I never do it.
Well, that's wise. Without a court order or a signed consent or
without
something.
a court order or signatures from both parties.
Right.
Still, it's. I warn people, and I'm sure you do as well. If both parties are on the title of that car,
Or the loan, either one.
I'm thinking legally,
Yeah.
the loan is an issue, but the title,
Yes.
especially,
Yeah.
if you own a vehicle, you are responsible for it,
Yes.
no matter who's driving
So
it.
if you haven't taken your name off of it yet.
If you haven't taken your name off of it yet, if it was me, I would want to control who strokes the check for the insurance
Yes.
to make sure it's paid.
Right.
Say you give your spouse, that's your car, you pay it, this is my car, I pay it, and you're still on that title.
Mm-hmm.
If she doesn't pay it and the insurance lapses
Mm-hmm.
and they run over something,
Right.
or their boyfriend or girlfriend runs
Exactly.
over
Who
somebody
knows?
with their permission to drive it, and it doesn't have insurance on it, you're on the hook
Yeah.
because you own,
And it could be really bad.
could be very bad.
Someone could die.
And yeah,
You know.
so you could lose everything you got
Yeah.
just for that
So it's
stupid
always
bit of
best,
stubbornness.
right? Yes, exactly.
And I don't know if you've seen it much, but I don't see much offered in the way of changing titles when you're in the middle of
No,
the
people
divorce
usually
until it's
wait because, I've had situations where when the divorce is filed, someone's got the minivan, someone's got the car. And then by the time you get to mediation or to court, they've flip-flopped on who wants what. Yeah. So sometimes it's best just to kind of like leave everybody's names on, leave everybody's name on the insurance, make sure everything's taken care of and getting paid until there's a final decision. And then remove your names from the title, remove your name from the insurance policy.
Great advice.
Yeah, right?
Great
But
advice.
people just get so angry.
I've had people just, fine, I'm not paying it, and I'll just cancel it.
Yeah, oh my gosh, I can't tell you how many times I've had to
at that point in time, it's out of my hands. If it's canceled for non-payment, I won't even cancel it unless I get both signatures.
Yeah.
But if it's canceled for non-payment,
there's nothing you can do.
There's nothing I can do.
Right.
At times, if I know who the lawyer is, I'll call the lawyer and say, you need to talk to your person.
You need to talk to your
real
person.
fast because they're getting ready to make a huge mistake. And
and car insurance is one of those things that takes a lot of things into factors. So, you want to do the right thing until everything is done. But one of the things people always come to me is like, okay, I'm getting divorced now. Who claims the teenager on their insurance?
that is a fun discussion to have.
Yes.
Definitely, typically, it's the custodial parent. But if you've got...
But what if the car lives over at dad's or mom's, the other house?
I highly suggest, and most of the time insurance companies want the child listed at least as a part-time driver on both parents' policies.
Well, I think there's a law, isn't there, where anyone with a driver's license living in the house has to be on the policy or something because they might take or borrow with or without permission? Isn't there something?
I don't know if it's a law, but I know I've seen insurance companies
that require it anyway.
And they will deny a claim if you've got a person living in your house full time that's a licensed driver that's not listed as a driver on the policy.
Well, I usually recommend to my clients that if the car is mostly at your house, that's the person who definitely needs to be paying insurance on that vehicle for that teenager.
And you can probably work it out in the settlement who pays.
Well, a lot of times parents share that cost.
Yes.
Sometimes they don't, but that's a hard one.
And it's your kid.
And your kids need to get a job and pay their own insurance.
Oh, yeah.
Oh, yeah.
Even if they're 35 years old and living in the basement.
Like, definitely need to.
They need a job.
Oh, that's like way past.
Right.
And so for just the last thing I want to make sure we cover is the homeowners and or renters insurance because, I got one
more thing, too, on the car insurance before we jump off of that.
Yeah.
Sometimes be prepared because you might lose discounts.
Oh, that's true.
Because you get a multi-car discount. Mm-hmm. If you have 2 cars on policy, you split it up, go off your own, you're going to lose that.
Right.
25%.
Plus, you may not have the homeowner's insurance either.
You may not have the homeowner's insurance either. You can get a renter's policy.
Sometimes it works out to your advantage, though. Let's say your soon-to-be former spouse is a bad driver.
Oh, yeah.
And then you drop off. You may lose some of the discounts, but you may have a much better rate.
You bet.
Because you don't have this, person with a DWI or...
When you marry somebody, you marry their driving record, you marry their credit.
And their mother-in-law.
And I'm lucky. I've got a great one.
Yeah, in case she's watching. Wink, wink.
Yes. I hit a home run on that one.
Yes, well, good.
Yeah.
So renter's insurance if you're leaving the marital residence and the homeowner's insurance if you're staying and keeping the residence, right?
Correct. Mm-hmm. And both parties, as long as they're still both on the deed before the quit claim or however you handle it is handled, both parties should be...
Kind of like the car. Whoever's name is on the title or on the mortgage should keep it. But what if I'm the husband and it's titled to me and I have the mortgage, but my wife is living there with the kids and I'm not?
The wife should probably be on it.
You think she should?
Yeah.
Because she's the one making the decision who comes and goes.
Right.
There could be some injury. There could
slips
be
and falls down the
exactly
stairs.
why she's there. And she's
dog
allowed
bites
them
somebody.
Mm-hmm.
All the above. So both parties should be
in. Probably should.
on there, and then the day that the decision is made, who's got the deed in their
Right.
name, then you can flip it.
And the same reasons for having renter's insurance when you move out of the marital residence into an apartment or condo or something that you're leasing, maybe temporary because you haven't found what you want yet, but you want to protect yourself for that too, right?
Right. You want to protect your liability,
Right.
and you also want to protect your stuff.
Right.
If there's and also if there's, say you're in an apartment, the apartment catches on fire, maybe
Yeah.
somebody else's apartment, but
Right. You never know when you have multiple people
but
living
you're
in the
burned
same
out,
building.
it'll protect your stuff, and it'll also and if you cause the fire, you got liability insurance.
Yeah.
If you burn down the landlord's building,
I mean, it happens accidentally.
And also, there's some loss of use coverage on a renter's policy, just like a home. So, so if your apartment burns down, and you're without a place to live, the policy will pick up.
So you have to rent something else.
Exactly.
Go to a hotel.
Exactly.
It's covered. Okay.
Yes. So pick that up as well.
Wow. A lot of information about insurance, and we probably only just touched the surface of
Pretty
what
much.
could
Hope everybody's
talk
still
about.
awake after talking about insurance for an hour.
It's good stuff to know. So they're staying tuned. I know they are.
Good.
Any other stories or tips you want to give real quick?
No.
No? None that you feel you're comfortable giving, right?
Call your agent. Whenever in doubt, call your agent.
Call your agent or give John a call. So one last time, give him your information.
John Misz, Choice Insurance, John at thechoiceins.com, 812-327-9533.
Awesome. Thank you so much for coming today.
Yeah, it's fun.
I know, right?
Hope
I always
didn't
have a
talk too
good
much.
time. It's like whenever you come to sell me insurance or sign up for my next one, which
It's
we're
like
going to meet
Yes,
soon.
we do. How about next Monday or Tuesday?
I'll be gone.
Will you really?
Yeah, but in April.
crud.
No, into March. Before April. We got to get together.
Yes.
Yeah.
Where are you going?
Not your business. I'm not telling them.
True. Okay. Good point. Your stalkers might follow you,
You
right?
never know where people might show up.
Yep.
Well, thanks again for coming. I hope you guys enjoyed my guest. I know it's a little dry talking about insurance, but everybody needs it. You got to protect yourself, protect your kids, protect your family, protect your future, even when you're gone. I'm your hostess of Winning at Divorce, Michelle Gregory. I'm a divorce coach. So if you need some help getting your winning team together and a little advice or just a sounding board, give me a call. Wes. Oh, and by the way, we're going to have Wes come on one of these days. Everybody's been wanting to know who is Wes, so we're going to get Wes on.
Who is this Wes guy?
Who's the guy behind the camera? So stay tuned for our next episode. Episode 6 we'll be shooting here in a few weeks. I'm Michelle Gregory, and we love you.
Thanks, Michelle.
Thank you.
This has been Winning at Divorce, a podcast to empower and assist you through the divorce processes and stages using stories and tips. We hope this podcast has shed some light on the main concerns that people face when going through a divorce. And remember, this podcast is for entertainment purposes only. If you need assistance, please seek professional advice from a licensed attorney or other professionals in your area. For more information about our services, please visit www.hmichellegregory.com.
Hello, I'm Michelle Gregory, your Winning at Divorce coach. Divorce is the most difficult and challenging time in a person's life. Regardless as to whether the divorce is your idea or not, the process can be very frightening, stressful, and overwhelming. You don't have to go through it alone. A divorce coach can assist you whether you just need a support person to vent or help you to identify your desires, set your goals, make plans to achieve your goals, implement your plans, or direct you to the right professional so that you can win at divorce. For more information regarding how my coaching services can help you, visit hmichellegregory.com or call me at 812-339-3600 to get started on your journey towards winning at divorce.